Moving back to India, where the biggest in this story is that the Indian equity benchmarks have ended the session on a stellar note, with indices closing at fresh all-time high marks. The rally was boosted on the back of better than forecast monsoon rains. Nifty ended above 9400 mark, while Sensex closed up 314 points at 230,248, while Nifty ended higher by 90 points at 9,407 points. Well, to talk more on markets, we are joined by Prashant Bansal, National Sales Head of Broking and Wealth Management, Destimoney Securities. Well, good evening, Mr. Bansal. Good news for many investors. So what is the main reason? What has led to this kind of, we can say, that boost in market apart from the monsoon forecast, the above normal monsoon forecast?
Good afternoon, Sumit. If we were to see Nifty, we closed at about 9409 and Sensex at above 30,000 level. But if you were to dissect the market, technically, we continue to see higher high, higher low patterns on Nifty and Bank Nifty, which gives us a Dow theory confirmation that the markets are headed upwards. And if you were to see markets from a derivative data point of view, we clearly see that 9300 is the floor on the market. We have got the highest open interest on 9300 put, which is about 7.7 million puts which have been written on 9300 level. But these are the very short things that we are looking at. But let's look at the global picture which is there. We are seeing there is a continuous rally not only in India but in many of the developing markets. If you see Dow Jones has been close to its all-time high. It's just about 100 points lower than its all-time high. When we see the French index DAX, so DAX is also nearly at its last 5 years high. If we see German index DAX is also at a last 4-5 year high. So most of the global markets have been running up. So India is also running up. So we are in line with most of the global markets. And if we look at the global scenario on the commodity side, we are seeing a continuous sell-off in gold, silver, crude. So there is a risk on trade which is going globally. So investors are betting on equities, and that's why most of the markets are going up. The only sore point in the Indian macro is that the FI data is coming negative. So when I was looking at the data last night, we had roughly about 2,300 crores of selling by the FIs. But when we look at the SIP inflows, only the SIP inflows in the domestic market is upward to the tune of about 5,000 crores. So it's somewhere FI selling is getting nullified by the domestic investor. So that's why we are betting big on the markets. We continue to maintain our stance that we are looking at Nifty at about 10,500 levels. That's what Destimoney Research has been saying for last 6-7 months. And we continue to believe that we will probably see 10,500 levels sooner than later.
So, Mr. Bansal, in such kind of market, definitely few people have missed the overall market boom. What is the advice for them? Where all can they invest in such kind of markets?
My advice to investors, those who have missed the bus, is don't be scared. Get onto the markets. Get into good large cap stocks. If you cannot handle stocks yourself, give it to a professional fund manager. Let a professional fund manager in a mutual fund or in a PMS manage your money. So this is not the time to be scared off from the markets. I'll take you back about 15 years back, when we were in 2003, 2004, 2005, we were seeing markets were continuously rallying like this. There were a lot of people who were scared. Should we jump into the market when Sensex was at about 5,000 levels, or should we stay put? The markets kept on making higher high, higher low. And as the old saying goes, trend is your friend. So be with the trend and enjoy the rally. But the big thing is, please maintain your asset allocation. You can make a shift towards equities more prominently, but maintain your asset allocations at this level.
So, Mr. Bansal, going forward, if we would say and stick to some sectors, so which sectors would you give weightage, proper weightage to, which still have some room to grow and still haven't reached their peak?
What we are recommending from our research side is that we are extremely bullish on the banking index. So select banks, then automobiles, infra, realty, and cements. So these are the 4-5 sectors that we are bullish on. We would recommend clients to look at the large cap index stocks in auto, infra, realty, cement, and ride the rally.
What about the global markets? What is happening over there? What we have seen so far is that there has been mixed reaction, but overall going forward, the geopolitical tensions have come down. There is some kind of stability. So what do you see happening with global markets going forward?
As said, on the global markets, we are bullish. We are bullish on Dow Jones. We are bullish on most developed market. And I think we got to look at the reason why we are bullish in the markets. We have seen a huge tax rate cut, which President Donald Trump has done. So this tax rate cut will improve the earning per share of large number of US corporates. So one, we are expecting a higher earnings from US corporates. Two, President Trump has a US $1 trillion infrastructure spending budget. So if his budget of $1 trillion spending actually takes place, we are going to be seeing a massive rally globally. We will be seeing that the growth rates, world global growth rates will move up, which will lead to a spike in almost all, whether it be equity or commodities at a later stage. So we are seeing a higher world growth, which will lead to higher indexes, and markets always discount the future. So what we are seeing is probably market is discounting what President Trump is likely to do over the next 1.5 to 2 years.
Thank you, Mr. Bansal, for joining us here on this day when Indian markets are touching new highs. The Sensex has jumped more than 300 points, while Nifty is also up by more than 90 points. Clearly, Indian markets are making new highs every day because all factors are in positive direction. Monsoon is there. It is clear it could be above our normal monsoon. IMF has forecasted 2018 growth at 7.7% for India. With this, we are taking a short break at Wion Wallet. After the break, we will continue with our other news. Stay tuned to Wion.